Good morning, everyone. Welcome to our Friday morning trading room. I don't know, this seemed, well, it was a fast week, I suppose. I was going to say, it seemed like a fast week this week. It's hard to believe it's the middle of the month already, my goodness. Okay, here we go with the NASDAQ. And the market yesterday, even though we saw some decent swings, did remain relatively range bound overall. The overnight rallying back near yesterday's highs. And we're pretty much beginning the day where we left off yesterday. Let's see, is that our first in sync signal? Oh, it is, just a few seconds off of the opening bell. I was going to try to do that first in sync signal here this morning on the Eagle. A little bit late, but it's been working out really well for the last couple of weeks anyways. I don't think we've had one day that first signal has not worked out. And it looks like today it will be no exception. And there we go, hit our profit target. So a very nice little move here out of the open. And that would be my day right there. I'd be done. $200 on a single contract. Thank you very much. See you tomorrow, or I guess Monday. This is where there's a real advantage to being able to trade multiple contracts as well. If you can take a position like this, take your profit and perhaps even leave a runner in play in case the market unwinds a little bit more. And I've mentioned before, you Raptor traders can do exactly the same thing. You can look for your first in sync signal of the morning. That would be that one right there. If you were watching pre-market, you actually got a chance to get in a little bit earlier, but right here is your first in sync signal. And here too, it easily found its profit objective. Oh, if you haven't noticed already, I have rolled over into the December contract. I was going to do it Monday, but I'll do it today. Saves everybody asking me, hey Eric, why are you still in the September contract? What's significant about rollover Fridays is that it could cause for some extra choppiness, as though regular choppiness was not enough. And you can see what's going on here. Just as it looks as though we may be establishing a downtrend, we've got the Eagle and the Raptor both bearish, and the Hawk and the Falcon both turning bullish. So a little bit of a mess right now, but there's no harm in waiting. It is still very early. We're only 5 minutes into the day. Yeah, Mark says late filter entries on the Falcon, they're like an ATM. I'm probably looking at this one right here. The late filter entry signal, of course, a very powerful signal. It occurs when your filter goes out of sync, comes back into sync. The trend line itself, however, never changes color. When you see that happen, it is a very strong signal. More often than not, it will be a continuation signal, although sometimes it will overlap with a trend change signal. This is a trend change signal on the Falcon. So your trend line changes color. Here is the move that changes the trend line color. Here now is the counter move trying to resume the old trend, and this the pushback with the new signal. Also a pretty reliable signal. We're sort of trading near yesterday's daily highs now. I know the overnight high getting much higher, but this was somewhere near where the market topped out yesterday. I think 76.10 was kind of the top end of yesterday's trading range. If we see a breakout, so let's say we look at the daily trading ranges as something like this, ignoring for a moment the overnight. We know there's selling up here. We know there's buying down here. The best way to approach this market is to allow it to break out and then prove to you that it can stay out, and then look for that signal. Likewise, a break lower. Now, I know that's going to seem boring because you got all this room here, and there will be money-making opportunities in here, don't get me wrong. But it's going to be a little bit more difficult so long as we are in a sideways trading range. Now, notice we're at the top end of the range, and we're producing a sell signal, which is what we would like to see near the top end. So if you were, what time is it? Okay, it's kind of not my favorite time to trade, but you know, here's the scenario. Can you afford a $200 trade? If you can, throw your order in. And that's really the whole deal of trading. You look at the market, you try to determine trend, So we're looking at this and I'm thinking, okay, sideways trading range, top end of the daily. I've got a hard edge bounce signal, a green bar sell. That's a pretty reliable signal. Can I afford the trade? Yes, I can. So then I'll set up the trade. And I took advantage here of a second push opportunity, which is always advisable if you're not entirely sure that the market's committed to the trend, to the direction, which certainly seems to be the case here this morning. So I was wrong about the trade. Even if I had taken the trade on the hash mark, this is still, even though a loss is unfortunate, it is still an amount I can afford. Right? It's 2% of my trading capital. It's not the kind of trade that's going to wipe me out. Hey, way to go, Mark. Mark says, took the trend change on the Falcon. That would be this one right here. And the earlier late filter entry right here. Mark says, I hit my goal for the day on 2 trades. Mark says, I'm seriously thinking about doing a combine. It's certainly worth investigating. The only thing about doing the combines, and for those of you unfamiliar with the term, a combine top step trader is one of the more reputable combines. And what they do is you actually trade other people's money. And it's a very favorable scenario. I think they allow you to keep up to 80% of your profits. The only thing with doing a combine is they have very strict parameters. How much drawdown you're allowed, how much risk exposure you're allowed. But you should check it out, Mark. You'd probably do well. It's a fantastic scenario. We've had a few owners go on to DTS and Raptor owners go on to do the combine and be successful at it. So it's definitely worth checking out. It's a it's a great way to make a couple extra bucks. You know, if you're trading your own account and then trading other people's money and getting paid to do it, shoot, it's a perfect scenario. Yeah, like Scott says regarding the combine, you've got to know those rules exactly. But you know, to be fair, it's their sandbox, so they get to set the rules, and they are strict rules. I'll give you that. Your timing has got to be sharp. which mine sometimes I get in a little bit too early, and I have to sit through a pullback. I wouldn't be able to do that with the top step parameters. Well, things still looking moderately bullish here. And I know I always say I'm not going to take that quarter to the hour trade, and yet here I am looking at that quarter to the hour trade. See, on the combine, I don't think they would allow me this kind of exposure. But at any rate, what I should do is I should review the rules. It's been a long time since I looked at them myself. So we're back now near yesterday's intraday highs. Remember, I said the smart thing to do was to let the market break out and then show that it can stay out. I'm attempting to get in early here off this number 3 signal, looking for a potential rally, which I'm not getting. We're back into the hard edge. We're hovering here around the median line as well, which is fairly neutral. That median line right in the middle of our support and resistance assortment. Those are these horizontal lines that we see. Yeah, no, Mark, I think you should look at it. I think you would do very well with the combine. Mark writes, with DTS, I can be very selective, stick to 2 or 3 signals, make a comfortable living. My Army retirement paperwork has begun to move, and it won't be long. I'll be doing this full time. Yeah. Sideways trading range. Got in early. Looking for the breakout that never came. Story of my life. Yeah, here's a good point. Mark says 4.5 years in the making, and you know what, Mark, you deserve it because I know how hard you have worked at getting a handle on trading. Mark is, cover your ears. I don't want to swallow your head, but Mark is the indicator warehouse poster boy because he really You know, took it to heart. He took the tools. He worked the tools. He learned about trading, not just DTS, but I know, you know, he learned the stuff. Started small, did proper money management. Okay, you can uncover your ears now, Mark. Yeah, Mark says, I knew this was a career that would take me through retirement. A lot of screen time, and that is the truth. There's no substitute for screen time. I wish I could remember the trader's name. He was an Italian trader, trading the European markets, of course. And he said anybody can be a successful trader. Just watch the markets for 8 hours a day for 10 years. Of course, that advice is not very practical, but his point was that you have to get comfortable with the markets. You have to watch the markets and learn how the markets behave. And here I go digging myself a hole again to start my day. All right, so while things were looking moderately bullish, now we're kind of neutral to bearish again. I knew this would be a difficult day today, this Friday, because of rollovers and option expirations. Stephen with the trader's dilemma question. Stephen writes, hello, Eric. Good morning. Well, good morning to you, Stephen. Question, why is it the trades I do not take off with a quick profit, and the trades I take after entry, the market seems to move more sideways and gives me a bunch of break-evens and anxiety? Well, Stephen, the answer is obvious. The market knows that you're in the trade. Of course, I'm saying that tongue-in-cheek, and I think your question is tongue-in-cheek as well, but it is so true, isn't it? Timing your trade is a very, very difficult thing to do. One thing, if you have the Geiger counter in here, maybe we'll focus on this for the remainder of the morning just to see how it plays out. But one of the Geiger counter owners said to me, you know, Eric, this is my secret weapon. He says, I do not take a trade unless the needle, I do not take a buy signal unless the needle is green. I do not take a sell signal unless the needle is red. And he said it's really helped with his timing. Because, of course, we're interested in order flow. For the most part, you'll see the order flow is relatively balanced. We get a little bit of buying going on. We get a little bit of selling going on. The histogram here shows you how balanced the market really is. Sure, there's a lot of buying going on here, but there's also a lot of selling going on here. A moderate amount of buying here, a moderate amount of selling, but for the most part, it's balanced. Occasionally, however, we're going to get these little periods where it is out of balance, where the market gives you a little bit more lopsided scenario. And sometimes that can give you a little bit of a clue when the market is unfolding one way or the other. Mark makes a good point here too, and this is a lesson that I had a hard time learning because it seems counterintuitive. But Mark says you've got to give the trade room to breathe. If it's a high probability signal, let it breathe. Almost every trade will be successful if you have a large enough stop. Let's take a look here at the one, my stinker here this morning. Okay, so I bought in at 76.10. So for the meantime, we're just going to throw this up here. If I won't be able to afford it, so I'll lock my trade. So let's say I bought in at 76.10 and I risk it below the low of the morning. I would still be in my trade, right? I would not have sucked up that loss just yet. You know, it's not the best looking signal. I thought it was worth a try, but it did not work out. But like, you know, Mark makes a good point. If you find a high probability signal, if the conditions are just right, you do have to give the trade some room. Too many people, you know, tried this kind of thing. And I know you're not doing that, Steve, but a lot of people, because they're afraid of losing money, never give the trade any opportunity to work out. And that is a big hurdle. That is not an easy hurdle to overcome. Break-evens are not a bad way to go, Steve. I know a trading friend of mine, Tom Loge, he will trade. He's primarily a short-term trader, and he will trade with abnormally tight stops. I'm talking like $20, $30 stops. And he will routinely get stopped out 10 times a day, maybe 15. So he'll routinely suck up $200, $300, $400 in losses before he hits a runner. And he's okay with that. That works for him. I personally could not do that. I think that would drive me wild. And that's one thing about the trading room too, is I can show you how I might do things. But I think it's important that you find what works for you too. And I think you need to be open to certain things. Trading is not cookie cutter. You know, it's like, for those of you who are golfers, you'll understand this analogy a little bit better, but I'm old enough to remember watching Arnold Palmer play back in the 70s, Jack Nicklaus, Gary Player, Lee Trevino, Hubert Green. These guys had very unique golf swings. Very unique golf swings. But each of them got the job done in their own way. It wasn't until people like Tom Watson started to show up on the scene, and his swing was fairly unique, but his is more in line with what modern golfers do. Now, modern day golfers, you watch Tiger Woods, Adam Scott, you know, Dustin Johnson, you go down the list, you can't tell one swing from the other. They all swing the same way. trading is a lot like that. There's a temptation to say there's only one way to trade, but that is not true. Yeah, like Stephen says here, not everyone shoots the same. You know, like Tony. I don't see Tony in the room here this morning, but Tony adapted the DTS and Raptor system to his own needs. He wouldn't do it exactly the same way that I would. Like, for instance, here on the Eagle, one of the changes he made was he reduced his profit objective. So instead of going for a $200 move, he was only looking for a $100 move, which he was okay with. But yeah, it's a struggle, Stephen. I know it is. I've been there. Shoot, you can argue that I'm still there. This last couple of days have hardly been impressive. I've done better a little bit later in the day, but you know, what can I tell you? It's a process, and I'm not sure you ever stop learning. You know, I read interviews of I particularly like Paul Tudor Jones. I don't know why. I think he's a very interesting fellow, interesting trader. Paul Tudor Jones, Ed Sequoia. Ed Sequoia is not in the news so much anymore, but occasionally Paul Tudor Jones still pops up in the news. Probably because they're both self-made men. But at any rate, you know, he's forever learning. He's forever finding new ways to do things. Some of them work, some of them don't. Okay, the Geiger counter was turning green there for a moment, so I thought we may have had a buying opportunity. We're looking at an early cloud crossover signal here. Mark makes a comment, it's hard to watch the market go against you. That's the human factor. But if you can wait it out, it generally pays off. That's where the screen time helps build confidence with this too. You know, I always take some comfort that if I take a stink bomb of a trade, at least I know I've controlled my risk. Okay, so I lost $300. Yes, it is no fun. But I didn't lose $3,000. I didn't lose $30,000. I controlled my risk. That was an amount I could afford to lose. Fortunately, my wife is the gambling type, so she doesn't have issues with this. She understands that it sometimes costs money to make money. She, you know, she's deadly in Vegas. Oh my gosh. That's a whole other story. But, you know, she doesn't have a problem risking a few $100s in an attempt to make money. And that's really what it amounts to as well. Trading capital is our inventory. This is our store, and we trade money. We buy and sell money. And just like, you know, Hugo Boss doesn't always bring in the best looking suits, they'll eventually work down the line and end up at Men's Warehouse with a different label on them. Okay, Geiger counter, the needle is red. We've got a warning dot. We're going to produce, probably it's going to come up as a number 1 signal, but you could also interpret it as a number 3 signal. I'm just going to get ready here on the sell button. And we'll see how this plays out if this doesn't help our timing a little bit better here. Oh, no, the market is getting a little bit more neutral. Not seeing that follow through. Now, sometimes the follow through is delayed. So You shouldn't panic if you sold the market. But generally speaking, we'll see how that works out. Like I said, one of the owners wrote me the other day and said, "Hey Eric, have you ever noticed that when your Geiger counter signal lines up with your Raptor signal, or I suppose you could use it on your DTS signal as well, but we don't have buy signals anywhere, that the trade tends to work out very nicely." But I appreciate your question, Stephen. I know it's a question that haunts a lot of traders. Oh, we got a late filter entry signal here now on the Falcon. So speaking of high probability signals, I'm just going to stay here with the Raptor for the moment because I know there's a few more Raptor traders in the room. But okay, we've got the number one signal. Let's see if the Geiger counter goes red. We'll get together one day, Steve, over a couple of beer and cry in our drinks. The market's not fair. Did you see what they did to me today? Well, look at that. The number one signal. I think we're almost to the profit objective. Just about. Not quite. Trading is very much a waiting game, too, and that makes it oh so difficult. I don't know. I get ants in my pants the first 15 minutes in, and I feel I got to do something, and I know more often than not it's not going to work out. I think I should just slam my fingers in the desk drawer and avoid it. A lot of times I don't really look at a chart for that first half hour of trading. You know, make myself a little bite to eat, maybe a cup of coffee, and then come check the charts at the top of the hour, kind of try to get a feel for what the market is doing today, because they do need a few minutes to kind of set their agenda, if you will. Oh, did I miss the opportunity here? I looked away for a second. The Geiger counter needle going red, and here was a follow-up sell signal, one of our discretionary signals. says throw a couple of bucks in the urinal and save the middleman, right? The late filter entry signal right here working out quite nicely as well. Trickling down, not really running lower. You can see the market struggling somewhat, but it eventually got down to its profit objective as well. Oh, and here now the Geiger counter getting a little bit more bullish. So at this point, I would probably get a little bit more aggressive with my stops if I'm following the cue from the Geiger counter, maybe bring my stops in a little bit. So whereas I was risking $200, now I'm risking a little over 100. So if this was 2% of my capital, now I'm only risking about 1% of my capital. And again, those kinds of trades are not the ones that are going to wipe you out as a trader. They're not the ones that are going to hurt. And then what I would do here is if I get another bar closing lower, I'll be even more aggressive with my stops. I think as a trader too, you need to recognize that not all days are the same. I've mentioned this before, but it used to be if we had one strong rally day, you could count on at least the next day to be a strong rally day as well. This was before the overnight markets were really prevalent. Nobody traded overnight, so all that intraday activity would spill into the next day. But now with the overnight markets, well, what they don't get to during the day session, they usually handle overnight. But now you get one rally day, you can pretty much count on the next day going flat. Okay, so I've got two down bars in a row, so I would use that opportunity to roll my stop at least to here. Or if I was a little less certain about the trade, I would probably take it to break even. And if I'm Scott, I would go break even +2. Yes, Scott says always. And the Geiger counter needle turning red again, so that's encouraging. And almost there. One more push. Yeah, Scott says that's how I'm sending my broker's kids to college. All right, well, they came up a couple of ticks short of the profit target, which is unfortunate. But again, it kind of goes back to the kind of day it is. Would have taken a break-even tag out unless your stops are still above here. But that did not work out too badly, you know, just employing a little extra tool to help with the timing. So if you have the Geiger counter, that's a a great way to look at it. I know Floyd likes to watch a 30-second ADX. So he has a 30-second chart going with an ADX on there, and if it's climbing, he knows the market's trending, and if it's not, I think it's below 20 that Floyd uses. Traditionally, it's 25. I know other traders that watch related markets. Traders will watch the E-mini and the Dow and take their cues off of those. In fact, the late Marsh Jones used to have a trading system. He traded the E-mini. He would watch the NASDAQ and the mini Dow, and if they made an abrupt move in their time and sales, he wouldn't even watch a chart. He would simply be watching the time and sales, which is enough to drive anyone crazy. But if he saw a big move in the NASDAQ and the mini Dow's time and sales, he knew he had a couple of seconds to get an order in on the E-mini, and then the E-mini would play catch up. A lot of people think the E-mini leads, but usually not. I know another trader who used to watch the DAX, and he figured the DAX led. So he would watch like a 5-minute DAX or a 1-minute DAX. I forget exactly what it was. I think it's important to have limits on your days as well. Loss limits, I mean. So that if the day does go sideways, you've capped your losses at X number of dollars or X% of your capital. Okay, the buyer's showing up here with a interesting little move, pushing the market pretty much, well, not quite back to the open, but relatively close to where we opened. right. Well, we're kind of in the middle here again. The Hawk and Falcon, the Hawk especially, already bullish. We've got ourselves a first micro macro cross signal right here that worked out. First micro macro crosses, by the way, seeming to work out pretty well here for the most part. Probably my favorite signal on the Hawk. Okay, so we're going to get a cloud crossover signal here on the Raptor, but you can see it's kind of against what we're looking at with the Geiger counter. We're out of sync. All right, so I'm going to keep a lookout here now for potential bullishness to come through with this #1 signal, and maybe the Geiger counter will coincide with that. Or maybe not. Yeah, Steven says, my best move was to stop trading the ES. The E-mini is by far one of the world's most popular day trading markets, and for good reason. It's huge. 12.50 a tick, everybody thinks that they're making more money, never realizing that the smaller tick markets, like the NASDAQ or the mini Dow, make the same dollar move. They make the equivalent size dollar move as the E-mini, and yet with the smaller tick value, you're actually able to manage your trades, your money, a little bit better. All right, here comes now the number one signal. It may not print as a number one. The clouds may not be fully crossed, but it will still be a number one signal, the next signal that prints here. And once again, I'm just going to get ready here on the buying button, and we're going to look for the Geiger counter to confirm that. We're about an hour into the session. This is sometimes when things shake up a little bit too. You know, thinking about timing. A lot of times you get something out of the open, sometimes an hour in. There's the signal. Just waiting now for the Geiger counter to confirm that, or looks like it's starting to get a little bit bullish. And so it is. So what I'll do is I'll set up a second push opportunity. It looks like the needle trying to get a little bit green there, not fully green yet. Okay, there we go. Now we're green. So I don't feel like I'm cheating. All right, let's see how this plays out, this scenario. Les asks, I thought you mentioned that it depends on how many contracts one trades. Well, I think Les is referring to my comparison of the NASDAQ with the E-mini. And after this trade closes out here, we'll do a little comparison. But generally speaking, because the NASDAQ trades at $5 a tick and the E-mini trades at $12.50 a tick, for the same dollar risk amount, you can usually trade twice as many NASDAQ contracts relative to the E-mini, right? Because it's half the value. And I'll show you that here in just a second. We'll see how this trade plays out. So the Geiger counter was in sync with our signal. And at this point, I've got two little swings. I'll probably bring my stops up a little bit here. We're almost to the break even. Hit the break even, and come on, just give me one more little push. Come on. There we go. All right, so you know what? Not a bad, I'm going to employ that a whole lot more. That actually worked out pretty darn good. Not a bad way to go at all. Okay, let's take a look here. Let's find here, we'll do the move out of the open because that's always easy. So we're going to compare moves out of the open between the NASDAQ and the E-mini. So we're going to go from the low here to this first swing. So that low right there to that first swing. Okay, on the NASDAQ, that would be worth $340. Just ignore the way I'm setting the trade up right now because it's backwards. But we're just interested in the dollar amount. Here now the E-mini. And we're going to look at that same move, which is right there. So out of the open, that first move higher. And it's worth $225. Okay, so approximately the same, close enough. We're only, $75 out or thereabouts. But here's the kicker now. If, let's say I set up this trade, let's say we're going to do it, we're going to use this bar here as our signal bar. Okay, with the E-mini, I can afford $500, or I have 5 contracts on that trade. On the NASDAQ, if I go into my percent mode, if I do that same bar, I can afford 6 contracts. So whereas I'm actually more profitable trading the NASDAQ. Remember, dollar for dollar profit is about the same. We're going to call it $300, even though the E-mini, the move was $225. We're going to call it $300 just for argument's sake. So with the E-mini, I'm trading 5 contracts, right? And I'm just using just one bar as an illustration. We wouldn't actually set up the trade this way, but just for illustration purposes. So with the E-mini, I can afford 5 contracts. That's within my risk parameters. 5 times $300 profit is $1,500. But with the NASDAQ, because it's less money per tick, I can actually afford an extra contract. So 6 times $300 is $1,800. The NASDAQ is actually proven to be more profitable than the E-mini. But you see, most people just look at the tick value and they say, oh, well, this one's worth $12.50, the E-mini. The NASDAQ's only worth $5. Therefore, I must be making more money with the E-mini. But that's not the case. They think that way because, of course, they think the market moves an equivalent tick amount. So let's say the market moved 20 ticks. So the NASDAQ moved 20 ticks. That's $100. The E-mini moves 20 ticks. That's $250. Well, in that scenario, yes, of course, the E-mini is more profitable, but they never do the research and they never realize that, hey, these markets are moving equivalent dollar amounts. Big difference. And like I say, the E-mini does give you the added benefit, or pardon me, the E-mini, the NASDAQ gives you the added benefit of the lower tick value allows you to keep a more reasonable stop, so you can keep a bigger stop without risking more. And by that I mean an inordinate amount of your capital. You're still capping your risk at your 2% level, or 1%, or whatever the case may be. And very often when you have the ability to trade multiple contracts, you can actually trade more contracts on the NASDAQ. Let's put it this way, you won't be worse off trading a $5 instrument, whether it's the mini Dow or the NASDAQ. You will not do worse trading those than you will trading the E-mini. Now, it's not as sexy, right? You're not going to stroll up to some pretty girl at a cocktail party and say, yeah, I trade the NASDAQ. And she'll say, what? You don't trade the E-mini? All right. So a decent little move up there. And now we're kind of in a holding pattern again. Oh, another, speaking of late filter entry signals, another very nice late filter entry signal right here. This one piggybacking on the, well, I guess technically the trend change signal came right here. This is an interesting thing for you Falcon traders. So here's our trend change signal. Once again, trend line changing color. There's the push that changes the color. There's the counter move. Here now the with trend move. So technically this is our signal right here. But notice the signal printed away. It gapped the trend line. When that happens, you should anticipate a pullback to the trend line. So if you're thinking the market's in runaway mode, make sure you place an adequately deep stop, because the market will pull back to the trend line, which it did right here. It came back with a late filter entry signal, coincidentally printing on exactly the same price, and then finally heading higher. So in spite of being a relatively choppy day, it's actually been a pretty good day. The market's a little bit slower, but still some decent follow through. All right, well, now we're coming back here with a bit of a counter trend move, aren't we? And I'm a little bit late on the signal, but you can see that number 2 signal was confirmed here by the Geiger counter. I'll just throw it up here for illustration purposes. The hard edge of the trading band will be our objective. Counter trend trades, though. Oh. Although I guess we're back near the top end of the trading range, aren't we? This little dotted green line illustrates the opening range high, which was also the high of the morning, high of the day up until a few minutes ago. All right, well, the woes of counter trend trading attempts, but I'm fairly confident the market will try to slip a little bit lower. We'll just throw that back on the shelf for now. I think I would prefer to stay with trend. I think this last rally up looking a little bit more bullish. Oh, and here we're getting a with trend signal. And we have a second push opportunity on this signal as well. Now remember, I mentioned before, the best thing to do is to actually let the market get outside this trading range, which means it's got to trade above this whole 76.12 area. It needs to break out and then show that it can stay out on a retest. Then you can look for your signal. That is the smart way to trade this trading range. I'm just showing the signal here because, well, it happened to be that we were producing a number 3 signal. The Geiger counter was green. Oh, the Geiger counter has since changed back to neutral, so I'll cancel that order. But I thought it would be an interesting experiment to do. All right, not ready just yet, so we'll put that away. Things getting a little bit more neutral here again. We'll stay with it for a few minutes more. I'm not sure we're going to get another decent opportunity here today, or if the market's just going to keep flip-flopping. one more signal. We're getting another number 2 signal here on the Raptor. The Geiger counter is red. We're getting a trend change signal here on the Falcon. A really, really ugly 4-arrow consolidation in the Hawk. And the Eagle, the only one that's moderately bullish, but look at this, trade forecaster saying we are in scalp mode pretty much for the, well, from now on through the lunch hour period. But a quick little move so far. The market hitting the break even. Let's see, I'm going to try to extend this just a little bit further. See if we can't get maybe halfway to this last little rally point. I don't do Fibonacci levels a whole lot. You can just eyeball this. Oh, halfway. We're at the halfway point now. So I'm looking more at a 62% retracement. If I can get that. And I'm going to squeeze this trade pretty hard too. There we go. There you go. That's all you get. 1 bar. The fib traders must be buying in early here, looking for a reaction. Okay, well that's all right. Not a bad scenario here today. Okay, so what started off as a bit of a stinker, not a bad day overall, at least got it back to a break even, back in the black. I really got to stop those early trades. You can see once the market kind of sets the tone, gets a few bars built, gets a little bit more context, it makes it much easier to place a trade. All right, gang, I think we'll close up shop here for the morning and have yourselves a most enjoyable weekend. And I will see you on Monday. Bye for now.